You're back with Squawk Box on a Tuesday morning and looking at the South Korean market. Not the only one that's sinking out here in Asia today. The Kospi in Seoul down 2.5%, 924 and change. And take a look at the Korean won as well. It is trading at 1482, which puts the won down about 1.7% against the U.S. unit on persistent worries about a protracted and deep global recession and also investors shunning Korean assets. Remember, yesterday the Bank of Korea cut interest rates 75 basis points at an emergency meeting, bringing the official rate down to 4.25%. It also pledged more spending and tax cuts next year to keep the global financial storm at bay. Daniel So is regional economist at Forecast. He joins me right here on set. Daniel, good morning. Good morning. Very good to see you. Korean won under pressure. They cut by 75 basis points. Rate expectations going forward. How many more cuts to go?
I'm seeing a 25 basis point, at least a 25 basis point cut in November and followed up by another 50 basis point cut in December. Interest rate may hit to as low as 2.25 in 2009. Okay,
now the question is, what about the Korean won?
The Korean won, the fall is overly excessive. Okay. So if confidence stabilized in a global backdrop in South Korea, we may see a spike in Korean won.
Really?
Yes.
Interesting. Well, is it going to take intervention, though, by South Korean authorities? I mean, they were in the market earlier on this year. They've stepped back. You wonder why, though?
Because they are afraid of the repeat of the AFC.
So Asian financial crisis.
Yes, especially in the current climate where there's a panic global deleveraging and of a resulting stronger USD environment. Yeah. So they are going to step back. So they are aligning themselves in terms of the effective exchange rate rather than to the USD itself.
Okay, but having said that, they do have more than enough in terms of FX reserves to intervene and try and support the currency if they want it, correct?
Yes. For now, definitely for now. But if this global deleveraging drag on for some time, they may not be able to defend their currency. If there's a spike in MPL, there's massive sell-off in Kospi, all the economic risks are heading up in South Korea, they may not be able to defend the currency.
Okay, interesting stuff. Let's talk about the government balance sheet, as it were. BOP, balance of payment situation, position, also their current account. Where is it right now for Korea?
It's in a deficit. But of course, why I say there's a overly excessive fall in the won is because oil prices have tumbled. Current account is set to improve. There's no way but an improvement when there's a cyclical improvement in the service account positioned. Okay. So the fall in won is overly excessive.
Okay, overly excessive. And medium term, what do you see support for won?
Medium term, I would say the support will be around, if you look at the dollar won, it will be around 1,500 to 1,550. But I see very limited scope for further higher extension because sentiment is very cautious now. They're looking at maybe possible further round of coordinated rate cut in the global climate. And that may stabilize confidence. And as I said, exporter are withdrawing, are betting on a further weakness in the won. And if exporter join back, an important balancing factor in the South Korean FX market, the won may spike up significantly.
Interesting stuff here. What we've basically seen is yen just going bananas, going haywire.
Yes.
G7's out, verbal intervention. Are you expecting physical intervention? Coordinated BOJ, ECB, Fed?
It may be on the cards. Maybe on the cards.
Timing when?
This one I'm not sure. If there's more massive sound down and the whole situation, the global situation, the FX market get more volatile, and they would definitely have to step in to do something.
Okay, we'll be watching. Daniel, good to talk to you, sir. Thanks for dropping by this morning. We've been talking to Daniel So, regional economist at Forecast, right here on set with us.